Yo, I bet y'all ain't noticed. Bet y'all ain't noticed though. So I found out that life insurance and real estate are cousins whole time. They related. Real estate and insurance. They cousins. They cousins for real, like blood cousins. They go hand in hand. So as y'all know, I've been selling real estate for 2 years. Started selling life insurance for the past 2 months. And I learned that the two are related, literally. A lot of people use one to finance the other. I'm a I'm gonna talk about it though. First and foremost, both life insurance and real estate are income producer assets. They're income producer assets because everyone needs both. You need both to I'm not gonna say to survive, but you want your kids to have something when you pass. You want to build generational wealth. You need life insurance and real estate. Every rich family, had an abundance of both, an abundance of life insurance policies and an abundance of owning real estate all around the world. So when you think life insurance, people just think death. Life insurance not just about when you die. Life insurance also benefits you while you live. And I'm explaining to you how. So income producer assets. Clearly, real estate, you own real estate, you build equity in that home, or you could rent it out and make money from the rent. And also, you could sell it upright and get a huge lump sum. So it's a multitude of options to make money in the real estate industry. And I'm about to tell y'all how you can make money with life insurance policies. So you have different types of life insurance policies: term life, whole life, universal life. The whole life and the universal life are the two policies where it builds cash value. In other words, the whole life and the universal life policy builds equity over time, just like owning a mortgage on a home. The home builds equity over time. A whole life and universal life insurance policy builds equity over time. Tax shelters for money. All right, let me explain this a little more. When you own a house, that's a tax write-off for you. That's why when you see rich people buying $2 million mansions, it's because they had $2 million in cash, but they needed to protect that money, so they put it into a home. Now it's a tax write-off. Instead of the IRS taking money from you, they giving money back to you. Life insurance, same thing, really. You got about 40,000 just sitting. You could invest that into a life insurance policy. You can invest your money into a life insurance policy, and then that money will grow over time with tax-free cash value. You could pull from that cash value anytime you want. Both you can include both into your trust slash inheritance for your descendants. You could put life insurance policies in real estate into one trust. So when you pass on, everything is in that trust. It gets directly passed down to whoever your beneficiary is. Generational wealth right there. Infinite banking system. I just learned about this recently and I'm still mind blown by it. So infinite banking system. So with life insurance policies, you could literally create your own family bank with your life insurance policy. If you want me to go into details, you will have to set up a personal call with me because it's a lot of little things I gotta do. But you can set up your own family banking with a life insurance policy. And what I learned is that wealth, I say financially literate people use these life insurance policies. They put money into it, let the money grow, and then that tax-free cash value I was telling you about, they use that tax-free cash value, they take it out, and then they use it to invest into other assets, such as real estate. For example, cash value don't build instantly. It's like a 5 to 10 year. It takes about 5 to 10 years to really build up to something. When I say build up to something, I'm talking between 50,000 to 6 figures. So let's say you get this life insurance policy, you paying into it for 10 years. Now you got a cash value of about 150,000. You could take 50,000 out of that tax free, boom, down payment on some real estate. You buy this rental property or whatever. Now, boom, you get monthly passive income from that real estate property. That's how you set up your retirement early. This is early retirement 101. You heard me say that you have to build that life insurance policy for between 5 to 10 years to really see the value. Is 5 to 10 years really that long? Is 5 to 10 years really that long compared to working 30 to 40 years just to touch your 401k or Roth IRA? Exactly. 5 to 10 years is nothing. You could be disciplined for 5 to 10 years, build that cash value. Now, boom, you have a down payment on early retirement. You could borrow money from yourself anytime. Life insurance policies. It's just like the stock market. The more you put in, the more you could possibly get out of it. But with life insurance policy, you don't lose money. You don't lose money similar to the stock market because there's a cap on how much you could lose and there's a cap on how much you can make, which is beneficial because you know you ain't never gonna lose money. You're not gonna make the unlimited amount of money, but you still making something and you're not losing anything. But once that cash value builds on that life insurance policy, you could borrow money from yourself anytime you want. Like I said, you pay into this policy for 10 years. Now you got 150,000 or so just sitting in there. You could borrow from that money anytime to do whatever with it. That's family banking. Compared to when you taking you going to the, instead of going to the bank for a loan, you could just take the loan from yourself. Loan that you don't have to pay back right away. Compared to a bank is going to make the terms of the loan. You be like, all right, 10% interest, you got to pay us back within 30 days or whatever. No, when you take money from your life insurance policy, there you make your own rules on whether you want to pay it back or not. If you don't pay it back, it just comes out of the death benefit whenever you pass on. That's infinite bacon right there. Infinite bacon for beginners right there. Retirement plans. Whew. All right. I just learned this recently too. You could use your life insurance policy to create a retirement plan. So I'm just give a wild example. Let's say you put in 1,000 a month, 12,000 a year into this life insurance policy for like 25 years, retirement age. You want to retire at 60. Boom, boom, boom. So you putting all that money in, all them years, then boom, age 60, time to retire. Now you could pay yourself out from the cash value of your life insurance policies in yearly increments. So you could pay yourself 50,000 a year now. After putting in that 12,000 a year for 25 years, you can now use that money and live off of it as a yearly income. That's how you set up your own retirement. That's how you create your own pension right there with a life insurance policy. Like I said, I will go into details, but you have to set up a personal call in order for me to really go into detail with it because I don't want to waste too much time going into details online. And I do this for a living, so I gotta eat too. But anyways, I told y'all about equity plus cash value, equity in a home, cash value, and a life insurance policy. Same exact things. That's why I say real estate and life insurance are cousins. They move the exact same way. They benefit each other. You can use the cash value on your life insurance policy to put money down, some real estate. You could take the equity out your home, and invest it into a life insurance policy. They cousins, they go hand in hand. And this is how you build generational wealth, and this is how you create your own family banking system.